It's pretty common around the all-time highs that people take some chips off the table. We're seeing long-term wallet addresses taking some chips off the table. It's pretty common ahead of the halving. Then it normally goes into what I refer to as the banana zone. And that's when you get the real price action. So the real price action hasn't happened. So I discovered this chart back in 2020. What it is the number of active wallets in crypto. Crypto.com measure this. Versus the, active IP addresses of the internet. And I always thought, well, this is a network adoption model, the same kind of thing. It's an adoption of a technology. And I wonder what they look like. And I put them over each other. And what we found was that, obviously, because the internet was the rails that already exists, the adoption of a new technology that uses those rails is faster. And it's actually twice the speed of the internet. So if you can get your heads around how big the internet was for all of us, this is happening at twice the speed. It's driven the fastest appreciating asset of all time. The compounded annual returns of Bitcoin is about 150% a year, even with 80% drawdowns 4 times in the middle of it. We've literally never been given an asset like this with an adoption like this. And going forwards, if we just assume that the rate of growth just matches that of the internet from here until the end of 2025, we end up with 1 billion users. And if we extrapolate that out to 2030, we get to 4 billion users. So basically, this is a pervasive technology that's going to take over all of our lives in ways we don't really understand. It's not just going to be about investing in cryptocurrencies, it's just going to be the underlying rails of transactions. The really important thing is crypto right now is $2.7 trillion industry. It'll probably finish this cycle at $10 to $15 trillion. And by 2030 or so, it'll be $100 trillion, right? This is the largest, fastest accumulation of wealth in all human history. It's as simple as that. That's what that chart tells you. Now, what everybody does, and Howard, you explained, there is a bell curve. And you want to be on the left of the bell curve. Everybody in the middle who overthinks it, it's simple. Number go up. That's the whole crypto thematic that you need to know. You can either do all the deep dive, just don't overthink it. The moment you overthink it, that's when you get yourself into trouble and you start not seeing it for what it is, you see it for what you want it to be. Is 80% of Bitcoin holders don't sell. I mean, and it's the same with Ethereum, with the staking and everything else. So your actual supply is 20% plus the miners. The miners keep getting halved every 4 years. So you've got no supply. So that's 20% of 2.7 trillion is actually available to buy. You bring something like an ETF and things go bananas, right? The more people who adopt it, the more the price rises. Also, the really key thing is, I don't know if you guys have ever seen the chart from Fidelity about the risk reward of assets. It's brilliant. So there's this big white page, all Fidelity branded, and here's the NASDAQ, and here's gold, and here's oil, and here's all of that. They're all clustered in the bottom. Then there's a blank page, blank page, blank page, blank page, blank page, dot, Bitcoin. It's a fucking alien asset class. We have never, ever had an asset class with this risk reward over a long-term time horizon and this performance in all of human history. Technology and crypto are driven by liquidity cycles, real assets, value stocks, commodities. They're all just the business cycle, and the business cycle's going up now. So these things are playing catch up. They were dogs. Now, as the economy starts re-strengthening, these will do well. And so everyone got left behind because they didn't do anything last year. And now they should do really well. And they should do really well in macro summer, macro fall. So they should just keep doing well over time. If the economy's strengthening, then bond yields tend to rise somewhat. If I'm right that this is the fastest, largest accumulation of wealth in all human history, right? If it goes to 100 trillion, this is the S&P is worth $50 trillion, or the US stock market, entire US stock. It's 100 years of accumulated value, and we're going to double that in a decade. It's like, this is la la land. The amount of money that's going to get made here is la la land. Look, with moves like that, you don't need to be over cute. Again, you can buy the breakout, and sure, it might even retest that, but it'll be fine. The thesis of don't fuck this up. Don't fuck this up. It's just keep 90%. If you're in crypto, keep 90% in the world-class top assets, and then do what you want with the 10%. And I own punks, and I own all sorts of stuff that's based on the ETH economy. I own the ETH economy, a small amount of the Bitcoin economy, and I think the official measurement would be a shit ton for me of the Solana economy. That's how I've done it. And this is the banana zone. So what happens at about this point in time, what we call crypto summer, we have this little shuffle around the all-time highs, and then everything just goes bananas. So I don't care whether this is tomorrow or in a month's time, because the number about to go up. And don't overcomplicate it. Everyone will overcomplicate this. They'll be looking at weekly charts, daily charts, hourly charts, tick chart. Just forget it. You should have a year plus to make a lot of money. This crypto market is the biggest gift retail investors have ever been given. We're going to a world where we will have equity in our culturally important things to us. In a world of AI replacing jobs, this is the future. You can't see it yet because it's super speculative and it's super early. But what we're doing is we're creating little mini groups of tokenized economies around ideas, memes, culture. We're tokenizing culture. This was a moment that people look back on. Here's your opportunity. You can make 100x, 1000x, 10,000x. We've seen them all in the last 2 months. And so, of course, it's going to attract people. So even, Phil, your example of Bitcoin going from 60,000 to $1 million, that's a 14x. That's not going to move the dial for somebody with $5,000. So they have to take risk.